the most common mistake that we see all the time is not getting an engagement letter. We recommend that you obtain engagement letters for all engagements. Even if you're doing a tax engagement for a client and they ask you about something else that's outside the scope of that engagement, we recommend that you either amend the current engagement letter or obtain a new engagement letter. The other things that we see maybe is not having the correct person to sign the engagement letter. You want to make sure that the person who is actually going to receive the final report is the one that signs the engagement letter, so there's no mistakes about what the report, who the report was delivered to, and what it contained, versus the person who contracted with you to do the engagement. Then we see just some of the other things that are missing. We highly recommend some of the different paragraphs in engagement letters, especially now if you're a tax practitioner. We certainly recommend that you get the foreign bank account requirement, the disclosures on that. We also recommend that if you can't get a signed engagement letter, you could always use, at the very worst case, the negative confirmation, so that you add a paragraph down at the bottom of the engagement letter that tells your client that by returning your work tax organizer that you agree to all the terms of the engagement letter, whether you've signed it or not. So those are just some of the few things. That the biggest problem that we have are members that just don't get the engagement letter to begin with, and we recommend those getting those obtained, or obtaining those every year, and also updating them every year, and making any changes to the engagement letter as needed.